Hi, everyone. Thank you so much for joining us tonight. My name is Kaylin Hessel, and I am the Advocacy and Outreach Manager for the Oregon Able Savings Plan. Tonight, we are going to talk about credit, cover everything you need to know. What is it? What is the credit score? Why should you care about it? If you have any questions, please put them in the chat and Q&A. Know that this is being recorded, so we will put it online later for people to watch. So if you'd rather ask questions at the end, there'll be a time where we turn off the recording and then you can submit them if you want to as well then. Okay, so I am excited to have Allison Barber with us today. Allison, why don't you tell us a bit about yourself and about Northwest Access Fund? Oh, hold on, you're muted. Let me fix that. You're unmuted.
I'm Allison Barber from Northwest Access Fund. I'm excited to be here tonight. I've been in financial management for people with disabilities for 15 years, helping with benefits, SSI and SSDI, credit management, credit building, those sorts of topics, and helping families figure out safe ways to save and not impact their benefits. Northwest Access Fund is based out of Washington, but we're also in Oregon, and we offer low interest loans for AT purchases, and that's a 5% interest rate. And then we also have the financial coaching program, which runs the gamut of any financial questions that you have for us. We provide resource and referral and some coaching around any issues that you might foresee.
That's quite the service. That sounds so helpful. I always love that. I know I can send people to you if they have questions like that. Okay, so Allison, what exactly is credit?
Okay, credit is buying something now to pay back later. That's a real simple way of putting it, right? But credit is basically based on what you can buy on credit. Also, the amount and how you pay it back also sets up a record with other with the credit bureaus to tell lenders who might look at you in the future to see how good you are at honoring your obligations. Okay, so that's what credit really is, and credit can be used as a safety net when it's used correctly for things like emergencies, that sort of thing. But you don't want to get to where you rely on it a lot, because credit also, when managed poorly, can lead to some major issues and lead to loss of income and even bankruptcy. So
Yeah,
it's really a tough thing to manage. But when you learn how to do it well, it can be a tool that can help you.
yeah, that makes sense. So it sounds like you can think of it as helping banks know in the future that you are trustworthy, that you're going to pay back the money that you borrowed from them like you say you will. So
Right.
then they use the credit score to kind of keep track of that, right?
They do, yes. And credit scores range from 800 to about 300. And it's better to have a higher score. Scores around 700 to 800 are considered good, or good scores. Mm-hmm. So you want to shoot for that amount right in there.
Sure. Is there like a minimum score that I need to get like a decent loan? Because I know, credit can affect the interest that they're going to charge on the loan. And if you're more, you have higher credit score, then they'll charge you less interest. So how much do I need to be decent, I guess?
So I think a good score to shoot for is like to really start getting better offers and not just predatory loans and offers that they call that subprime lending. Mm-hmm. When you have a very poor score, you might still get a credit card, but they might charge you an arm and a leg and raise your interest rate, so you're paying back more for that money, right?
Mm-hmm.
So a good score to really start seeing better offers, lower interest rates, that sort of thing, is anything 617 to 650, something like that. You might start seeing easier rates
Sure.
and
Yeah. And
better offers from credit card
yeah.
companies for lower interest.
Yeah. And so when you say subprime, that reminds me of the Great Recession. We heard a lot about subprime mortgage loans. So it's kind of like that, like somebody takes on more than they can really handle, right?
Absolutely. Hmm. So
Okay.
yeah, when you take on more than you can handle, it means when you want to manage credit well, it means you put money on a credit card, but you're able to pay it off monthly in full every month. If you
Mm-hmm.
leave any balance behind, that kind of shows that that's a signal that you might start falling behind, and you might start accruing more debt than you can actually afford to pay off, and that's when you get into trouble.
Yeah.
So the best way to keep good credit scores are to make your payments on time, and pay them off in full.
Sure. So what if I'm just starting out and I don't have credit that I know of? I don't think I have a credit score. You know, when you turn 18, I don't think they automatically give you one. So
Right.
what can you do to start building your credit?
Who don't. So when you go to start building your credit, when you want to start building your credit, what you want to look for is something called a secured credit card. And that is a type of credit card that you give money to the bank. Like, let's say you start out with a $500 secured credit card. You would literally go in and give that money to the bank
Mm-hmm.
and they would give you a card where you could pay, start paying them up to $500 to build your credit. And you pay that off to them again, and that starts building your credit score.
Mm-hmm.
Okay. And once you paid off that secured part of the loan, so you buy the card basically by giving them the $500, then you get $500 credit. Once you use that enough, then it will roll into a regular credit card. But when you start off with a secured credit card, you do have to make that payment to purchase the card, basically.
Yeah. So when you're starting with a secure credit card, it's more like you're borrowing from yourself. You're putting some of your savings aside so you can start building those habits and start proving to people that you are trustworthy.
Yes. And another way to do it is becoming an authorized user on
Mm,
someone's credit that you know is good. You don't want to become an authorized user on anyone's credit,
mhm.
right? But you want to make sure that the person that you are borrowing from or an authorized user with has good credit, and you can kind of piggy bank off of their good credit habits to help you build a score. Um, when I see that, when I'm talking to a lot of parents, they get concerned because they're like, wait a minute, I'm not going to give my 18-year-old a car. They're just going to go on a
Mhm.
spending spree, right? But that's not the case at all. What you can do with an authorized user is you don't have to give the person a physical card. You will probably get a physical card in the mail for an
Mhm.
authorized user, but you don't have to give that card to the person to necessarily build that score up. You don't have to put yourself at risk to build the score for a child or a friend you're helping out. Yeah.
Okay, so that sounds like it would be especially helpful for any of those teenagers, young adults transitioning to adulthood, might still be living at home. Um, they can have, mom and dad list them as an authorized user, and then they can, work on it together.
And then if you want to put a couple bills in the person's name, that's
Mm,
also another way to do it. But you want to avoid utility bills, that sort of thing, because utility bills aren't necessarily reported to the credit card the credit agencies in the same way. So
huh.
phone and utility, possibly, like putting your name on the phone bill could be a good way of starting to build that credit record.
Mhm.
Utilities, maybe not.
Okay.
Yeah.
I'm I mean, what about like paying my Netflix bill or other stuff like that? Like,
sometimes that can be helpful. Okay, hold on. We need to show that the purchase is being made and completed with a vendor that is making regular reports to a credit bureau.
okay.
So a lot of times Netflix may not directly say, hey, this guy's paying me his $14.99 a month. But if you're putting that on a credit card and then that payment is then paid off to Netflix, then that builds up a good credit score.
The credit card companies are always going to report to the credit bureau.
Not necessarily. If it's a credit union, if it's a credit union card, credit unions often do not pay report to credit bureaus because of the cost of that service for them. So when you have a credit, when you have a card through a credit bureau, it might not, or no, a card through a credit union, it might not be reported.
I had no idea about that. That's a good thing to keep in mind. Last month, we were talking about the difference between banks and credit unions. So that is a good additional one to keep in mind. So if you're getting a credit card like from your bank, they're probably reporting that, but the credit card, it's not so clear.
With a credit union, with a credit card from a credit union, if you're getting like one from like Bank of America, Wells Fargo, Chase, those are all the major players, they're going to be reporting. But if you're getting one from like On Point, Advantis, all of those, Unitas, it's probably, they might be skipping at that. And you can ask your credit union before you take out a card, do you guys report to the credit bureau?
Yeah, that's a great idea. How easy is it to find a secured credit card? I know a while ago I needed to get a credit card that didn't have like any of the rewards on it. And the banks aren't advertising that because people usually want the rewards. So I had to actually like walk in to my local bank and be like, do you offer a really basic credit card with no rewards? Is that kind of how you get a secure card? You just have to go in and ask, or can you usually find that information online?
You can usually search for secured credit card online. You can find those sorts of things on Credit Karma, NerdWallet, those sorts of things. Type that in and find a reputable source. You can also go to the customer service kiosks at some grocery stores have secured credit cards. Green Dot Bank has a secured credit card specifically for youth that is usually available, and you can preload it at the customer service kiosk, and then they will open the account for you. So there's those options as well.
Okay, interesting. So how do I check my credit score? How do I find out how trustworthy they think I am?
Okay, so every credit bureau offers tiers of credit management and score monitoring, and some of them are free. The one through Experian is free at a certain level, and that will give you a monthly snapshot of your score with Experian. The thing to keep in mind is that all three scores are different, and the FICO, TransUnion tends to be, in my experience, the lower end of your score, and Experian tends to be your like highest, and Equifax tends to be middle of the road, right? So when you get one score from one place, that's not a full shot of your score, because each credit bureau has independent reporting, and so their credit scores might be a little different, vary from by a couple points. And then there's the FICO score, but also the Vantage score. The Vantage score is fairly new, and not a lot of banks are using it because you have to pay a lot of money to access that Vantage score. But when the Vantage score, I want people to be cautious when using the Vantage score, because it can sort of make that score a little higher than what is usually the FICO score. or the FICO 9 score is what currently is being used, which is what lenders base your credit worthiness off of most readily, is the FICO score. So when you see something that says Vantage score from like TransUnion, just know that that's a little higher than what a lender would normally see.
Okay, that's good to know. So is there like one place I can go and see all of those scores, or do I have to, search for them different places?
Yeah. So during COVID, they had you could check your credit score at annualcreditreport.com. Don't go to freecreditreport.com. It's a total scam, and they will make you pay for that free credit report. Trust me. So go to annualcreditreport.com. During regular times, you can pull it once a year, from one report from all three bureaus once a year. So that's a good way of checking your history to make sure that everything is current. Once you have a score, it's important to check it at least once a year to see if all of your information is current. And then also, there's a lot of banks now that are offering like these money management widgets, and they have scores available with the money management widget as a free service of the bank. Also, when you get a credit card and you've used it for long enough, they can offer you a free score snapshot of your FICO score. One thing I'll note about subprime lenders is if you know you're using a subprime lender, let me think of a couple I can think of. One subprime lender that I'm fairly familiar with is Credit One Bank. And they get people because their logo is very similar, or used to be similar to Capital One. And so they get people that are thinking they're signing up for Capital One, and it's really Credit One, right? And Credit One has a bunch of really bad lending practices, and they charge you for balance increases, all that sort of thing that you might ask for, which they shouldn't be doing. And then also their FICO score reporting, which they say is free, is historically very much lower than your actual score. So be wary of your lender's credit score if it seems off. You can trust lenders like Visa, Chase, those sorts of places have reputable scores with their cards. But not necessarily, subprime lenders. They might be intentionally lowballing your score. It's a pretty interesting thing.
Yeah, so that is all pretty complicated and so many different places to go to figure it out. So it sounds like it's probably a good idea to maybe check a couple different places, once or twice each year, so you have a more holistic, whole big picture idea of what the financial institutions are seeing.
Right. So what I've done in the past is I sign up for like 1 month or like 2 months of credit monitoring each of the different bureaus, and it's like $14.95. Last time I did it was 2020, and it was like $14.95 at TransUnion, $19.99 at Experian back when I did it. And what that does is it will give you a snapshot long enough so that you know what it is, and then you can cancel your membership, right? And they will stop charging you. They usually make it really easy to turn on that membership and turn it off.
That's again. Nice.
Yeah.
What do you think about like Credit Karma?
I hear a lot of people have used it to get cards. It makes me a little nervous because Credit Karma is driven more by advertisement than what is wanted, what is best for the consumer. And their scores have also been kind of off, I found. The Credit Karma will say one score, and then somebody will be like, well, that's not my score. But on Credit Karma, it said I was doing really well. So it's a mixed bag with Credit Karma. Yeah. So I
Okay.
would go, if you want the most reputable number and the most reputable, um, service, I would go directly to the bureaus
Okay,
for
that
that.
makes sense. Okay, so if you don't plan on taking out a loan in the future, should you still care about your credit? Like, does it matter for things besides just like buying cars and houses?
Yeah, this is something I wish I knew back in the day. Credit score, landlords look at your credit score. Um, Anybody who you want to do business with, employers, sometimes look at your credit score. So a credit score is really, really important for these major transactions that you want to do in life, not just getting a loan, getting a credit card. So you need to build your relationships and build your financial worthiness and the picture of you as a safe and worthy saver or buyer and consumer. You need to build your credit score.
Okay. Do you know if for like a landlord, if there's any credit score number that will scare them away? Like, is that any different than what we were talking about earlier?
Yeah, so landlords can do all sorts of things. There are some rent protections that allow people in now in Portland, especially where there's rent protections for all kinds of different things. Um, but credit scores, I've seen some renters turn away people with less than $600, 600 credit score, sorry, a
Okay.
600 credit score or higher. So really be aware of your credit score when you go to apply for a place.
Hmm.
And if you want to address your credit score with your landlord, a good thing to do is to talk about your barriers in a cover letter that you
Okay.
would give to a prospective landlord, right? You would say, I know I have these amount of debt and this is affecting my credit score. So when you pull my background check, you will see that I have a low credit score or I have a bankruptcy or anything like that. But then you also want to talk about the steps you've taken to address your low credit score. Like I'm making regular payments, and if you're working with financial coach, this person can write me a letter, a
Hmm.
recommendation, or can give you a reference as to what I'm doing to address my financial barrier to renting. It's really
Okay,
good
so
practice.
just be upfront with it and explain what happened in the past and what you're doing that's not reflected on there, that you're trying to take
Yes.
care of it. It just takes time.
So you have to show number one what the barrier is, but also that you're being proactive to fix it. So you're taking steps to fix your debt.
Okay. So what if when I'm looking at my credit report, I see something that is wrong or just, yeah, doesn't seem right?
That's
What
wrong.
can I do?
There, so there are a number of different laws, credit laws, that
Mhm.
protect you against fraudulent purchases. So number one, let's start there. If you see a fraudulent purchase on your card or you suspect someone might have had your card, call your credit issuer right away. They are not allowed to charge you anything that you believe to be fraudulent. And you need to show them your last documented or the one that you know you did, the last transaction that you personally were responsible for, and then point out anything that you think is fraudulent. If you did not catch it at that point and you see fraudulent activity on your credit report, happens all the time. Sometimes people will just find your social security number, your address, and are able to open a credit card in your name. If you know that that's not you, you need to go to the bureau and report it, and they will remove it or take steps to remove it. And they will allow you to make a statement. Basically, every credit report, you have a personal statement section where you can write fraud. I know that this transaction or this card is fraudulent, and I'm working to get my identity restored. Um, yeah, so personal statements, writing a personal statement on what you see that's wrong is the best way approach it.
I had no idea there was a section for that. That's great advice for sure. I will make sure to do that if anyone tries to steal my identity.
When you're writing with the credit bureaus, you call in and you say, here's my issue. Here's what I see that's wrong. Here's why I know it's wrong, because I wasn't, I never shopped at World Market in my whole life, and here's a card, card from World Market. You want to also follow up that call with a letter in writing to the bureau, and also with a personal statement with that letter that says, here's my personal statement that needs to go on my card, just to make sure people know.
Yeah. Okay. So what about somebody who has had financial trouble in the past, and I don't, the banks are really hesitant to deal with them. They don't even want to give them like a checking account. Like, what can they do to start getting their credit on track?
Well, the first thing to do is start small with a manageable purchase, and honor your bills. Honor your bills. Look back. It's a good idea to contact one of us at Northwest Access Fund and get your credit pulled. We can do a soft pull, which has no impact on your credit, to look at what the issue might be. A lot of people have that kind of barrier and they don't know what's going on. There's also, when you go into the bank account and they refuse to open a checking account, there's also a check systems report that we can pull, which deals with the banking system and will tell us what barriers they're seeing and why they're not opening something. Okay. So it's always good to call a financial advisor, and Northwest Access Fund is a great place to go for that. And we can help you find your barriers first. And then once you know what your barriers are, you can work towards remedying that. And sometimes if it's in dispute, if you say, hey, that's not me, you can also make a dispute with them.
Sure. Okay. Are there any, what barriers do you see the most, or is any one like more common than the others?
I think because we are, people with disabilities historically are on systematically enforced low incomes, right? And I speak to this from a personal perspective as well as a professional one. I think when you don't have access to capital and you're not educated on the impacts of credits can seem really, really appealing. And when I was 20 years old, 19, 20 years old, I started getting these offers in the mail for $10,000 credit limits. Yes. Yeah. And as somebody with living on what was 624 at the time, which was my SSI benefit, I was like, here's a way to afford life, right? Yeah. And I'll catch up. I'll always make my minimum payments. I'll always make regular payments. I'll pay more than the minimum if I can, but I can catch up when I get a job, right? I can catch up when I make money. I never missed a deadline, a payment date. I never missed anything else. But my misconception in my young mind before entering financial education was, oh, I can just solve this when I have money. And that's not the case, right? So, and I think with low capital, debt and lending can seem like an answer to everyone's hopes and dreams, right? Oh, I can't get that, but here's this loan and they'll help me, and it's a really reasonable rate. I mean, I think also educate yourself on what interest percentages mean. Okay, there's a lot of debt calculators on the web, and one of my favorites is debtwave.com. It's a nonprofit debt consolidation service, but it will also teach you what the impact of an interest rate is and how expensive really 19.99% is, and what those numbers after the decimal really add up to impact the score, right? because you're thinking 19.99%, that's not 20, it's not 22, but it really does start to add up. And if you don't do well with your credit, your interest rates can increase. And when you do well with your credit, your interest rates can decrease. So, yeah.
Okay. So you mentioned earlier, that you can do a soft pull on your credit. So I've heard soft pull and hard pulls. What is the difference?
Okay. Hard pulls can stick up on your credit score for a long time. And that means if you had enough inquiries, when you ask for a a credit card or something, the agency that offers the card will do a hard pull. That will stick around on your score, and it will often drag down your score for a very short amount of time, but still drag down your score. Now, if you've had multiple pulls, and this happens a lot, people are like, okay, I don't have my job right now, I'm unemployed, I'm going to take out a bunch of credit cards, right? And so they have multiple pulls on their credit at the same time. Or this happens a lot with people in high debt situations. They've tried and tried and tried for a loan. They don't know what's happening. Hey, hold on one second. So they don't know what's going on with that. So and it happens with high debt situations. People have been, turned down for a loan and turned down for a loan, don't know what's happening. Well, each time they went in for a loan, they also got a hard pull of their credit to have that lender look at their credit, which also negatively impact the score, right? So
Yeah.
it's not a great situation.
Yeah. So is there a way to get them to do like a soft pull instead? Because that doesn't show up on the report, but they still get to look at most of the information, right?
The soft pull, like that's exactly what that means. Soft pulls are really, they don't have any impact on the credit score. It's like somebody is just sort of looking at your credit score to help you, right? Looking at your report to help you. That's what debt management, credit counseling services have access to. That's what like financial services like we have access to.
Okay. But if it's like somebody who's going to lend you money, or like if you, so when I bought my last car, you go into that like financing office and they're like, let's see what kind of loan we can get for you. And then a bunch of hard pulls showed up on my credit score, which we did not enjoy. Yeah.
And it just like sinks it, right?
Yeah. And some took a long time to get rid of. I was like, very annoying. I already had financing. I will not do that again.
Yeah. So one thing to think about is when you are opening credit cards, don't do it all in 1 year. Don't go and get multiple accounts in 1 year. Do one year and one the next, and so you just sort of roll into it slowly, and that will keep you from doing the multiple pulls, which just it takes a bad situation if you're already in debt and your credit score is already low and drags down further.
Sure. What are some of the biggest things that affect your credit score?
So basically the top two are payment history. If you're making your payments on time, that is a huge part. And also the amount of credit to debt that you have is also a huge part. Lesser known things that will impact your credit are like new credit and those sorts of things. But those are the two major ones. How much of my credit score, of my lending credit, have I actually used? And have I missed any payments lately? That's a big one. So if I have $10,000 on a credit card, I don't necessarily want to go out and buy $9,000 worth of goods on said credit card if I don't have the money to immediately pay that off, right? Yeah. Because I don't want to show that I had $10,000 and all of a sudden my credit utilization is so high that I only have $1,000 remaining.
Yeah.
That's going to sink my score,
Yeah, 'cause
right?
that's like what, 90% of the credit that you had?
Yeah, and what is the ideal credit utilization percentage? Does anyone know?
I want to say it's like under 3%.
It's actually 36%
Oh, okay.
or below. Yeah. You don't want to even get above 50. Yeah. And
Okay.
when you have multiple cards, you want to think of that as a total, all of your cards together, all of your balances together. What does that equal? And then how much
Mhm.
of that am I actually using? What is my credit
Okay.
utilization?
Yeah. Um, so then as people are building credit, and if things are going okay, and the credit card company offers to raise their credit limit, what do you think about that? Because it seems like that could help with that credit utilization rate. If you don't, start spending a lot more money, if you keep spending the same amount, it would lower that percentage.
Right. I think that this is a classic puzzle for people, right? Because they don't want the temptation. The problem with raising your credit score or credit limit is that you have more to use, which raises your credit utilization percentage, right? Because you're using less of your credit now. But also the temptation is just a little too much. So I would look at how well someone has utilized their current credit limit. Are they seeing
Mhm.
themselves keep up to the limit? Are they seeing themselves not putting much on and paying it right off? That's the biggest indicator to whether you should raise that credit limit or not. But yes, it will bump up your credit score.
Okay. But it's not going to be worth it if you're suddenly going to go out and spend 10 grand tomorrow and not be able to pay it back for a couple of years. That'll hurt it a
Right.
lot more.
Absolutely.
Mhm.
Mm-hmm.
Okay. So there's been, a lot of talk nationally about debt, especially student debt. But there's all sorts of debt that you'll hear about, and it can just be kind of, scary. um, So what can I do to not be so afraid of that? Like, I still have some student loans. I would like to buy a house in the nearish future, but the idea of taking on such a big loan is a little scary. Like, I know it's different and like the house can, lead to all sorts of good stuff, but it's still like a big number to, get wrap your head around and get comfortable with.
Yeah. I think that when we're talking about education and housing, we're talking about these big items that people need for advancement, education for advancement, and for security, housing, right? So there's a lot of things that have to be thought about when you're going to take on those two debt loads. But it's not to be daunted by the big number that you're going to take out against the house. What you want to look at is whether you can afford the payments
Mhm.
on said a house mortgage, and then whether you can afford everything else that goes into housing. So sometimes people look and say, "Oh, I can afford that mortgage payment. It's $1,500 um, and $30, and I can do that easily." But they don't think about all the other factors that come from when you move into a home for the first time. Let's say from an apartment, and you're suddenly responsible for water, and and all the other utilities, garbage, everything else that you're adding on to that. So the first thing is to know to talk to your friends who've taken out this sort of thing and have an idea of what it's looked like for them to
Mhm.
shoulder all of these different expenses, and then make your total budget, right, equal to your current rent payment, right? So housing and utilities and all this sort of stuff should be what everything covers when you're making your rent payment, right? minus
Okay.
utilities. Okay, so
Yeah.
that's affordable. Yeah, especially if you've been able to rent for a long time with no real concerns, right? Yeah.
That's a good tip. Thank you. I will definitely do that math for myself.
So that's
So when you hear people talk about good debt or bad debt, what are they talking about?
good debt is debt that helps you in the long run. So good debt
Okay.
would be something, and bad debt is the debt that like sticks around, you're not able to pay off, that really uh it's stuff that you can't pay for, and it's kind of it's the debt that really doesn't bring stability or advancement, right? It's the debt on the smaller items that is too much. Yeah.
Hmm.
Whereas good
Okay.
debt is like debt like uh, your home or your education. That's it. It's
Yeah.
building on something. When we
Okay.
touch on student loans, I know we did that in your question.
Hmm.
Um, there should be something mentioned about disability and student loan forgiveness.
Yes.
So
How does
yes,
that work?
if you have a disability, you can pursue student loan forgiveness for your loans if you're not able to work and pay off your student loans.
Okay. Does it
Okay.
matter when you got your disability? Like if you had the disability before you went to college, can you still do that?
Yes. Yes, you can. But
And
you have to
if, go
demonstrate
ahead.
that you cannot you can't pay it off because you can't connect to the workforce, basically.
Okay. And then, so if you're, 40 and you become disabled and you can't work anymore, then they could also apply for that?
In some cases, I'm not going to talk about every case, but yes.
Yeah. But it's open to a lot of different situations. That's great
Yes.
to know. Okay. Let's see. What else was I wondering? Oh, so will borrowing money affect people's benefits at all?
Borrowing money does not impact your benefits because it's a debt, so it's like a bill that you
Yeah.
pay. It's
It's not like you
actually
really have it.
it's actually a pretty effective um, vehicle for spending money and keeping your asset limits low, right? So so before able became a thing, a lot of people liked credit because they could just dump their money into their pay off their credit bill every month
Mhm.
and then lose most of the money in their uh, checking accounts when it turned over the next month, right? Um, that is still the case. It's not going to impact your benefits, but it is something to really be cautious of if we don't have a lot of money to begin with and we can't. So I say first start off with your debit card hooked up to your good old bank account, right? If you're able to stay within your your expenses and still save over some money each month of at least $20, and that you're doing that consistently, then maybe consider going, jumping to a credit card and doing the same sorts of purchasing and the same sorts of paying off you're
Mhm.
doing with your debit card. But first, you gotta test run your debit card. You gotta test run how well you're doing at keeping to your limits, because debit cards will simply decline your transaction when you're out of money, whereas credit cards will just not do that.
Yeah.
Yeah.
So so much of this isn't just about the tools and the money you have access to. There's a lot of habits and skills that go along with it. So you need to practice spending within your means and saying no
Absolutely.
to the really tempting things that you see at Target. I know
Yeah.
that's always hard for
Yeah.
me.
Yeah. No, I mean, when you're buying something, do two things with it. Figure out, okay, given the fact that this is $500 that I'm purchasing, how long will
Mhm.
that take me to pay it off? with my disposable income. Hold on. Sorry about that. So yeah, when we're looking at purchases, we want to say, how much is this and how much of my disposable income? And when I say disposable income, what I mean is all my income left over after I pay all of my essential bills. Okay.
Mm-hmm.
So it's a discussion of like, what do you consider an essential bill, right? But once you've paid off everything you think is essential, everything else is discretionary. How much of my discretionary income am I going to have to pay this off? And how many months is that going to take me? Okay. So if I have $100 in discretionary income, it's going to realistically take me 5 months to pay off a $500 purchase, right?
Mm-hmm. But
And
then there's also the interest.
Of that, yeah, that's my next point. On top of that, it's accruing interest. So there, it's also going to have that benefit. So when you are looking at buying a major purchase, think about only buying something you can pay off in that first month, or at the very least, like 2 or 3 months is what I would say, from especially if we're looking at families that are looking to build credit for the first time. Don't buy the castle and be paying back for the rest of your life. Buy something that's more manageable.
Yeah, that's a great tip. Well, Allison, you've answered all of the questions that I have for you. Is there anything else you want to make sure people know before we end?
Yeah. If you would like to schedule an appointment with Northwest Access Fund, you can do so by going to our website, which is nwaccessfund.org, or emailing booking, BOOKING, at northwestaccessfund.org.
Okay,
And
great. And I'll make sure to write both of those down in the description so that people can just copy and paste it. Yeah, Allison, thank you so much for joining me. Really appreciate it.
Absolutely. Thank you.
Yeah. And so everyone else, we will be talking about how to start working while keeping those benefits next month. So whether you're looking to have a job, you're trying to balance work and benefits, it should be a great one to check out. So we will see you next month.